So first we're going to start off with Bitcoin, like we usually do. So I don't remember what we were on our last roundtable that we did. I don't know what our discussion was about, but I do know it was pretty bearish for this intermediate term back in May for Bitcoin. And from my analysis from that wavy rejection, we have just absolutely crashed. We have crashed from that rejection at 81, 82,000, and now we actually hit the major support level at 59,000, almost 60,000. This is still an amazing long-term buying opportunity. I did buy more. I bought some HOOD and some mstr down here from my Roth IRA, just because it's amazing long-term buy here. I believe Bitcoin is probably going to be entering a stage where it actually does the opposite of the U.S. stock market of SPY. Usually, ever since its IPO, it has been following the U.S. market to the T. However, obviously, that has diverged since the middle of 2025 in September, August, right? So Bitcoin entered the bear market when the U.S. market was still bullish and still is, right? So I think whenever the U.S. market tops out, that's probably when Bitcoin's going to shift into its uptrend and start its new bull cycle. However, short term, I still believe we will go lower. I'm still watching that $49,000 level to take out this major low that we had near 2024, and also there's a ton of support levels down here with this major liquidity pool here. So I think 49K is like a magnet for Bitcoin right now. I've been saying that since we topped out at 126,000. So hopefully we can actually hit it. That'd be very nice. If not, no biggie. I already have a lot of Bitcoin owned here because we are at support. I'm not saying wait to only 49K to buy, but I do believe 49K is probably what we're going to see here in maybe a month or so. So depending how fast we dropped, we dropped pretty fast from this bull flag, but we are forming, or not already formed, we already have formed a bull flag on the smaller time frames right here for Bitcoin. We topped out at 66,000, 66.8 thousand, and now we actually rejected that retest level for Bitcoin here. Again, as you can see with Bitcoin, we absolutely love forming our bear flags, wedges, stuff like that. Bitcoin absolutely loves them. So right now, bear flag or wedge, whatever you want to call it, is playing out. Now I think we can push down to 49K from here. I will be shorting Bitcoin actually today right after the call. I tried doing it before the call, but I couldn't figure it out. So I'll do it right after this call. I'm going to enter some future shorts on Bitcoin. But yeah, kind of like I did on this wavy. I entered that my Bitcoin shorts up here. I think I mentioned it on my last roundtable talk, and then I literally sold them as we hit around 62 and 60,000. So made a lot of money on that trade. Probably my biggest trade ever, actually. But yeah, what is your thoughts on Bitcoin?
Yeah, so I would like to share my screen here. I want to talk a little bit about the last roundtable that we had and some of the predictions that we made, because some of them were cryptocurrency and specifically Bitcoin linked. Mm-hmm. So I'll hop in here. I just pulled up my mstr chart. Go entire screen. All right, you guys should be able to see that, yeah?
Yes, I see it.
All right, so this is mstr. What I actually am going to do, I'm going to go into the Discord so that we can put, we can see exactly when I called it out and exactly when, or exactly what our projection was. Okay, so right here, right, May 28th, 2026, that was our last roundtable. This is what we had. This is the chart that we had, right? So the price was 151.61. We had 3 levels of gap down, well, 2 that weren't reached yet. One where the price target was around the 140 level, I believe. I'm not sure exactly where that level's at. But then the other one was around 115, right? And that was the projection we made May 28th. Look at the chart today, right? We'll go to 4-hour time frame. And this arrow is, everything's exactly where it was. I didn't change any of the drawings, and we filled both of these gaps, just like our projection. Amazing. Right, so this is the bearish sentiment that we talked about with Bitcoin. MSTR is the largest Bitcoin holder out of any Bitcoin holder ever. 200 SMA is up here at 192. I do think this will go lower before it gets higher, similar to what you were talking about with Bitcoin. But I just wanted to bring that up real quick. I think this adds some credibility to our analysis here, not only on Bitcoin, but not only on MSTR, but also on Bitcoin. we obviously know what we're talking about. I think this stuff's super profitable. And this level is a very significant level too, around 105 to 110.
Yeah.
I think a lot of people will be buying here. I think this definitely could be a pivot point with earnings on the 4th next month, or in 2 months. But, we'll see. We don't like to predict bounces. We try to ride the waves. So, you know how it goes.
Yes.
But that's all I got for that. I'll let you hop over, take control again.
Let me, I'll go over to MSTR really fast. So that's basically crypto. That's everything on it right now. I expect 49K. MSTR is actually probably one of the, it's going to sound really stupid, but I think one of the best long-term opportunities there probably is in the market right now. At least probably no-brainer. A lot of people talk about tiles going to zero and all sort of crap because of some Ponzi scheme or whatever else, which it's not in a way. I mean, I see their point of, them diluting shares and buying Bitcoin maybe with leverage or borrowing money to buy more Bitcoin. I do understand that. However, it's going to work unless Bitcoin reaches like 20,000. I think that's around their liquidation price is around 20,000.
Yeah.
Yeah,
I agree.
I think it's around 20,000. It could be 40,000 if some really bad cases happen with the company, but overall, I think the liquidation price is around 20,000, maybe 25,000, just somewhere in that range. And Bitcoin's not going that low. I mean, once it reaches my target of 49K, which is already ridiculous, it would then drop another 50% from there, which I don't see that happening. So I really doubt the MSTR is actually going to get liquidated off the NASDAQ. They're not going anywhere. This is, the typical bears, that happens every single correction with Bitcoin. Like I see people now on X talking about Bitcoin is going to zero. It's going away. It was all just one big Ponzi scheme. And of course, that's not the truth. So MSTR isn't going anywhere. And really, for MSTR, I mean, it's the same thing. $99 is the 49K level for Bitcoin. However, since this is obviously leveraged, it's going to go much lower than $99. We're probably going to see around $62 maybe if Bitcoin does reach that 49K level.
Yeah, that would be the next leg, right?
Yeah, because this would be the inverse fair value gap down here, around $50 to $60, which would be an amazing buying opportunity, right? And you can actually see during this entire bounce for MSTR, we've had zero volume. I mean, just zero volume. So
gradually decreasing.
Yep, and then on the move down, increasing volume. So I think this is going to have a very strong push to $60. So if you could get a short opportunity on MSTR, that would be absolutely fantastic. I'll be shorting Bitcoin after this call.
So let me cut you off and ask you this: do you think we'll see some consolidation around this 100 to 110 level before we cross that level and head towards 60?
You know what? If Bitcoin wants to actually start reversing SPY, then I think so. However, I haven't fully backtested that yet, but that was the theory I was looking at today because one of my mentors was talking about that, and I was like, well, that's what I would want to see because obviously Bitcoin entered a correction before SPY. So if SPY enters a correction, does that mean you have two scenarios? Bitcoin just crashes even more, and maybe even does go to 20K, then MSTR gets liquidated, or once stock market crashes, then Bitcoin soars, right? So that's something that we have to look at and review. But if that's the case, then we'll need to see Bitcoin start to go up right now as SPY crashes. Because once we go to SPY, we'll review that. But right now, SPY is down like 0.7% in after hours right now. And so if SPY does pull back here, I'm not saying necessarily will, but if it does, we'll review it in a second, then crypto, we want to see some bullish price action for Bitcoin, and which would mean for MSTR, which means we could consolidate here or see some slight move up from the zone that you marked, right, from that support zone. So if we do that, which would be ideal, because then it'll actually confirm the thesis of the Bitcoin, then yes, I think we could bounce here. However, that's just something we have to look at here in a second and really see if Bitcoin's actually going to show outperformance when SPY pulls back, if SPY pulls back. So right now it's kind of, I would want it to, yes, but it's really hard to say. I'll have to do some more back testing and data on that. But yeah, I mean, right now Bitcoin is green in after hours, and ES is at down 0.5%. So, and Bitcoin's almost up 0.5%. So it does kind of add up here. It does. It's kind of showing what it needs to show. So there's definitely a possibility. However, we would have to invalidate this daily bear flag, which it definitely could. It's only a daily daily, but chart wise, it doesn't look really good for that scenario. So we'll see. But yeah, so that's my thoughts on mstr. I think it's the probably one of the best long-term ads here. You have Microsoft, you have Meta, who are both beaten up, right? Microsoft's really beaten up, Meta's still really beaten up for the long term. However, they can still go much lower, and the returns aren't that ideal. It's much safer. I'm not saying go all in on mstr, but for a bet on Bitcoin, this is, I think, a no-brainer. So, but yeah. So that's crypto. That is mstr. Coinbase, I still expect lower to this green zone around 120. Hood, although we did break above the bearish wedge, I still expect lower, especially if once the U.S. market pulls back. I would expect this lower, or at least it's not going to be one of the top performers, because Hood is a mix of U.S. equities and obviously Bitcoin. So right now, one's in the bear market and one's in the bull market. It's not, they're conflicting each other, which is going to hurt Hood performance, I would think. I could be wrong, but that's what I would think. But yeah, as of right now, you can just merge everything out except for Bitcoin over to all the crypto stocks, because it's going to be the same analysis, right? Crypto pulls back, all the crypto stocks will also pull back. So I guess let's get over into the overall market. What do you see right now with ES or SPY or whatever in the actual market?
Yeah, so I'm not totally sure. I think it might not have been our last roundtable, maybe the one before, but I remember thinking that the market looked pretty toppy.
Yeah.
It might have been the top of that flag there. I'm not quite sure. I forget exactly, but I thought it was toppy before. I still think it's a little bit toppy. Obviously, the situation in Iran is complicating the markets right now. We'll see something online where it mentions that the war is over, and then we find out the same day that Obama was dropping Lebanon, and it's quite conflicting, and I think that has a significant impact on the market, specifically the volatility. I'm not sure exactly which direction it's going, but again, I've been preaching this all the time. We don't predict bounces, we ride the waves. So I have my levels set on a couple tickers here in particular. I won't be trading SPY in itself. I'll be looking at my specific tickers, but I'm not sure which way to go, I guess, or which way the market's going to go in short. So we'll have to see.
Yeah, I'm kind of with you on that. I can literally see either way. I can see a bull run. I can also see a bear move. However, what I can say, which actually we can actually compare this exactly to the 2026 drop near February or March, right? I was in the exact same scenario that I am in right now, and that was start to 2026. The market did look toppy, even a little bit before that. However, there's still a lot of stocks that looked really bullish, right? There's still a lot of stocks that looked like they were going to absolutely just run very violently, and I was like, this is super bullish, right? But I was stuck because SPY was looking like trash and it was like it was about to collapse, but yet the stocks I was trying to buy was looking really bullish, which was giving me very conflicting views, right? Because most of the time, if the SPY market, U.S. equity SPY pulls back, the stocks will also look really bearish at the same time. So this is actually the first time I've actually seen them be opposite of each other.
Yeah,
they're conflicting, and then what's happening is the market is bleeding one sector at a time. So push all the sectors up, it'll crash the crypto sector, and then it's going to crash the mineral sector, then it's going to crash the energy sector, then software, then tech, and then some other sectors are also going to boom during that too. So it's very, very conflicting because all the setups, all the sectors are all looking bullish, but yet they're trying to be collapsing and breaking below support because of SPY. But yet SPY doesn't really pull back that much, right? As we saw last time, the start of 2026, a lot of stocks just absolutely died. I mean, they were seeing I think around 40 to 70% drops depending on the stock, while SPY only pulled back 7%, almost 10%. So I'm like, it was like we almost freaking entered in a almost not really a correction, but a tariff crash. But yet SPY hasn't gone anywhere. So
interesting to think about too. The volume during that crash didn't really move that much in the grand scheme of things. On the daily volume there. I don't see any big changes. It's like people almost expected that little drop back in credibility check before they broke all-time highs.
Yeah, it's also interesting that the volume is increasing, to not drop very slightly. I guess you can say steadily, but there's no massive spikes at all. And even going into this top, the volume was mostly flat, right? Kind of what you said. I mean, you could argue maybe a slight decrease like that, but I mean, for the most part, this thing is basically just flat. And so that's not really great for really helping you with the bear case. The only bear case we had was a massive bear short divergence with a rising bearish wedge, which is the same thing we have now, which is very funny. However, what we do have now is this entire violent move up. I mean, the volume is just nasty. This is just a massive decreasing volume here on this entire move higher. And then when we do actually pulled back, we did start to see increasing volume on that pullback. And then again, on this entire up move for SPY, to also form, again, another bear source divergence, we had zero volume, right? So zero volume on this push higher that we just had recently. We touched the all-time high, we rejected the all-time high, and we formed a bear source divergence. Another one on top of the long-term bear source divergence that we already had, right? So SPY here does look really bearish, and I can't deny that, right? The very obvious signs, like my confluences that I usually have to call like a top is a bearish pattern, a bear source divergence, and a bearish volume divergence. And we have all three of those.
To align. Yep.
And we have all three of those. The only thing that is bullish right now that I can see is that one, we already hit the minimum target for SPY. We already hit around 7,300, which is the bottom of this wedge. We hit it and we did bounce. We bounced off the the 50 EMA. And so we did hit support. We did hit the minimum target, which means we technically could just rip and go to all-time high for at least for my strategy. Kind of like how we did back here, right? This was minimum target, was 6,500, the bottom of this wedge, and we bottomed out there. We manipulated it, but we did bottom there, right? And the same thing has happened here. We manipulated it, but we did bottom here. So, we did hit the minimum target. So this is kind of the point where I'm at, last time we were shorting without the minimum targets being hit. Now if you're shorting with the minimum target already hit. We already bounced that support. So it's very conflicting in a way. It's and also look at Bitcoin now, up 0.44%. Wow, ES is almost down 0.50. This is lovely. We need to keep this up to really show that Bitcoin outperformance thing. But yeah, so ES, really, that's the bullish part that I have, is just we hit the minimum target, we're bouncing off the EMAs, a lot of stocks look bullish. Short-term bearish, right? We'll get to that here in a second. So I do believe we'll get to small pullback. But this is where the debate comes if we're actually going to make another low, if we are actually going to go below 7,200. I think really the lowest we'll probably go is maybe 7,400, around here. At least for the bull case, right? My bull case is we pull back to fill this gap. Let's go to 4 hour, maybe it's more, yeah. So the 4 hour still has a gap here. I think we can pull back to fill that gap, and then I'm looking for a bounce there to rip higher. I don't think we'll pull back lower than that. At least this is probably my base case is bullish, but I am definitely reading and taking these bear signals very, very seriously. It's just with this war going on, it's so hard to say, right? When we had the tariff crash, it was very obvious. I mean, it was the most obvious idea generation that you could ever have for market pullback. He was going to office preaching he was put tariffs on everything, and they did put tariffs on everything. It was very, very bearish, so it was a very obvious pullback. However, now they could end the war tomorrow and then we gap up to all-time high, or they could keep delaying it like they are and bleed the market, right? So the war right now, you can't really get an answer from. And I know the markets hate having the high risk of the undecision, right? I guess you can say speculation. So they don't know, right? And they don't like uncertainty. I guess that's the word, right? And now this new Fed chairman, I watched the entire FOMC meeting that we had last week, and he gave zero clues of what they're going to do for the rest of the year, right?
Oh yeah, dude, I totally missed that. I would love some insight on him, what your thoughts are, if you have any.
Yeah, so my thoughts about the guy, I don't know. I never really looked at him in the very far past, since I am newer to market 2022. I'm not new, but in the grand scheme of things, right? So I don't know his work. This is my first time actually seeing him, is when people were talking about him getting into the Fed chairman. But what I can tell from that meeting was that he refused to give any predictions on what they're going to do with interest rates. And again, when that happens, the market hates uncertainty and it loves to chop, or maybe even crash depending on the scenario, and which right now we are chopping. We've been chopping for a while, right? So there's that. He definitely was not giving any insights on it. However, he does do a dot plot, or not him. I don't know if it was him or the voters that they have on the board, but they have a dot plot that kind of showed like who thinks what they're going to do near the end of the year, and half of the board says they're going to hike rates from now to the end of the year. At least I think they're aiming for at least one rate hike. Half of them say at least one rate hike, and then half of that half say more than 2 rate hikes, and then the other half are all no rate hikes, but also no rate cuts. So every single one there is bearish. I mean, 100% of the people, with one person not voting, and that one person not voting was the actual Fed chairman himself, because he doesn't like to try to predict it. So right now, if we want to take the dot plot accurately, which I know a lot of people say it's BS and it's not real, if let's just say it is real. If you take it from that standpoint, that is very bearish. I mean, that is definitely very, very bearish for the macro view. That is very extremely bearish for the yields, right? And I'll state this right now. I've been saying this for the last year. I know I say this on probably every single roundtable, and that is if yields start breaking out above the switch, which I thought it did break out before, but it turned out it wasn't. We still made a lot of money on it, but we had it like this before, which means that we're at the retest level now, which very well could play out. However, I don't think that's probably the case. I'm just going to ahead and assume that it's actually like this. Trend lines are very manipulative. Wedge is very manipulative. You can draw them a million different ways, right? So if we draw it like this, we did reject, which is fine, because that's what we're supposed to reject. And now the next step is a higher low. And if we do get that higher low, which means the 50% fib, possibly just a 38% fib, but ideally a 50% fib, around 4.3%, that will give SPY a chance to get another leg higher and their shorts run higher, which is kind of what's going with my bull thesis, right? We pull back for that gap fill and then run higher, right? That will give a chance for the yields to pull back to that 50% fib, and then we can look for breakouts. But the day that this breaks out, that is the day the correction will start, because yields going higher is not good for our debt. That's not good for the economy. That would be very, 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 very bad for the U.S. market. So, I mean, the second that happens, the market's toast, right? And so basically, the way the yields go higher is if people are fearing for rate hikes. So if they're hiking rates, this is going to break out, right? And we're also kind of forming, I guess you can say, a falling wedge here. It kind of looks like it, which would mean we break out sooner. But it's very difficult charting bonds or yields. That's more of a macro thing. You can still chart it like I did here, but it relies more on macro too than just like a regular stock would. So yeah, so like the new chairman, uncertainty, but all the other Fed chairmen or the other voters are saying, half of them are saying rate hikes, and the other half are just saying nothing for the end of the year, which is still kind of bearish. It's not bullish, but it's not bearish. It's like leaning slightly bearish, but basically flat. Because especially since near the start of this year, they're going into this year expecting rate cuts, and now we completely just reversed it to possible rate hikes and no rate cuts, right? So, but this all can change, right? That's just what the dot plot says. I can say when I was watching that meeting, I did miss Jay Powell. I did miss his good afternoon, right? I'm sure you know what I'm talking about.
The iconic.
Yeah, the iconic. Yeah, exactly. The iconic good afternoon versus what? And
the stock market just tanks for a second.
Yeah. He was the best. I don't think we're ever going to get a Fed chairman better than him. I know a lot of people hated him just because he wasn't cutting rates, but he did it perfectly. As you can see, if they were cutting rates, the market would have been a very bad scenario if it just kept cutting, right? So, because right now inflation is going higher because of this war and stuff. So imagine they were cutting rates going into this war, and then the war started, and inflation got out of control, and now they would be forced to hike rates. So right now, he had to hold the rates flat. And so, since he had to hold it flat, that's much better than now having to have emergency rate hikes because they cut it too soon. So I know for years they're hating on him. I've always said he was a good guy in there, and I think he performed excellent near the end of his term. I think during his entire term, but especially at the end of his term, I was really watching him really hardly.
Yeah.
And so,
quick shout out to Powell, man.
Yeah.
Powell was the GOAT.
I know, we need him back.
I love the way that he always spoke so eloquently, and he was very careful about what information he shared. He was great.
Yes. And even though he was very careful, he said more than the new guy said. he didn't give out any information really. Like, I mean, everyone was asking him questions and he was just denying them all, just repeating the same phrase. I cannot answer that question. I cannot answer that question. So it was very annoying interview or annoying video to watch or live. So it was. I don't like him. However, I don't know his decisions, so I can't say his decisions were necessarily bad. So we're going to wait and see how he plays it out. But as of right now, I don't like how he's bringing uncertainty in the market, because that's definitely not good for the bull case. But let's see. So we covered yields. We covered. See, is there anything else in the market? So the bear case is obviously bearish source divergence, bearish volume divergence. If that happens, we could pull back to take out the low at 7,200. We could go possibly to 7,000, maybe lower. Let me see where the 200-day moving average is. The 200 EMA is at 6,900, so we could go to 200 EMA. That's definitely possible. You know, I don't see the market entering a correction right now. You know, if the yields break out, like I say, and they do end up hiking rates sooner or whatever else, then yeah, then I can see it happening. But as of right now, the yields isn't breaking out. They haven't hiked rates yet. Inflation last time was the worst report since 2023. However, it was very, very, very slightly below expectations. The rest were like on par or maybe slightly worse. So basically, it was I'll say a neutral report to me, although yes, it was worse since 2023. That was also May's report and not June's, right? We're still in June. Or was it April's? Either way, that doesn't really change anything, because oil has been crashing. It's now around, like, I think $60, $70, and so around $77. Yeah, I forgot I had a massive gap up, but yeah, around $77 right now. So it has been crashing, which means inflation should get better. Now, if it doesn't, that's another big concern, but it should get better. So we're seeing old data when oil was still higher. So this next report should be way better inflation. And if it's not, then it's worse, and then that's getting a little concerning, because that means it's not necessarily just oil; it's other stuff too. That's when it gets a little concerning. And I also remember during that FOMC meeting, they asked him the exact question: where do you think inflation is coming from? Do you think it's from oil, higher oil prices? And he just refused to answer it. So it's very concerning. I know Jay.
To be fair though, with that question, they're just asking him to speculate. You know.
Yeah, well, in a way. So Jay Powell was answering that question before, and his answer was which I think was perfect. I think it was on par with it. And he said that the inflation report that we were actually seeing a few months ago when I was watching his meetings was that this was still from the tariffs. However, the tariff inflation was going to end, I think, the very next month. I think it was May. I think it ended in May or April or whatever month it was. And he said that he thinks it was ending because it was slightly getting better. And then he says it's new inflation, because that's like, it was the very first inflation report that we had that was worse, that he had on the meeting. And he said this was the first report that was kind of bad, but he says this was just the leftovers of the tariff, which ending. He says we'll see the oil inflation here like the next meeting. And so he says the next inflation report that's going to be bad is going to be solely on oil, but the inflation report, he said, was also going to get better because of the tariff thing was going away now. So he says it wasn't going to be terrible, it was going to be mostly flat, like it's still going to be higher inflation than we had obviously before. So it basically was just going to hold, at least that was a speculation, I guess you could say, was that we're going to hold the inflation, quote unquote inflation, from the tariff over, just because now oil took its place, right? And so he didn't think it was going to get much worse. So he didn't really expect any rate hikes, but he said we're definitely not cutting rates now because of this. And so I think that was a perfect way to answer that. You know, so the market would love to know what was causing this inflation, because if it's really not oil, now it's a much bigger concern, right? And I guess I know why. I guess because he said it's not oil and it's much bigger concern everywhere else, obviously the market's going to absolutely just die, right? So I guess that's why. However, the market will find out eventually, obviously. So just a matter of time. So until then, I think the market is going to be pretty choppy, like we have seen. So that is something that we are definitely watching. But yeah, so I don't know. I don't like the guy so far, but I'll give him a chance. That was the very first meeting I've heard him. So we'll see what he goes on into the future to talk about and what his decisions are. So, but yeah, so I think the market in the bear case can pull back to the 200 EMA that we saw, and bull case we pull back to fill this gap and then push the new all-time high. But you know, I definitely don't like that volume divergence. Definitely like the RSI divergence. So we'll need to see those change really fast if we want to actually flip bullish. So But yeah, that's the overall market. Do you have anything else to add to the overall market?
I do not. No, I think you covered most of it. I think the Fed chair change is definitely going to be very significant. So we'll have to look into that and just keep that in the back of our heads. That's a big change that people are still getting used to.
Yes, I agree with that. It's very high risk right now. Who knows how that's going to play out. But yeah, so I guess let's cover some stocks really fast. Did you have some stocks you wanted to cover?
Yeah, so I think a great way to do this, we just had the SpaceX IPO. If you want to pop your stream back on, I would love some of your thoughts on SpaceX. And then after you, I'll go on SpaceX, and then I'll transition into some of the stocks that I want to review. What do you think?
Okay. Well, I'll say this. I tell my clients this every single time when they ask me to chart something. If it's a new IPO, I say no, can't chart it because there's not enough data for me.
Fair enough.
My time frame is much longer. I need that stock to at least be IPO'd for at least over since the last correction. So 2008 is ideal. 2020 maybe could be ideal. Sometimes I can do an IPO that's like 1 or 2 years out. Like CoreWeave, I can do CoreWeave. It just really depends on how price reacts, right? CoreWeave IPO'd in 2025, but I can do that because the price action is much cleaner. It reacts to technical analysis, right? Yep. So it really just depends on how good price reacts. And I would expect SpaceX to also react really good, but we only have literally 5 candles, so there's not much I can really chart. I can draw you a daily buy zone. I can draw you that.
So what do you think about this? Maybe if you might just be able to give me your insight by answering a couple questions. What do you think about the overall sentiment of SpaceX? Do you think it's undervalued? Have you compared it to any other space stocks and stocks in the sector? What do you think, like in the valuation benchmarking sort of world?
So this is where it gets really complicated because everyone is screaming. It's really bearish, right? I mean, this is how everyone's playing, right? If we let's go back before SpaceX IPO, right? The narrative which was all over my Instagram feed, all over TikTok feed, all over my Twitter feed, and that was every single person was expecting SpaceX to crash, but they were expecting the space sector to soar going into the SpaceX IPO and beyond. So they thought the space sector was just going to soar while SpaceX IPO'd and after. And they were halfway right. Space sector was soaring, and then as soon as we got a confirmed exact date for the SpaceX IPO, which was like a week and a half, maybe 2 weeks before it IPO'd, the space sector topped out right there, tanked, and then when SpaceX actually IPO'd, the entire sector just freaking died, right? And while SpaceX was short-term outperforming the sector, and then eventually it started collapsing for the last 2.5 days. So, that's very interesting, right? It was almost like a sell the news event because now all retail just got bags because obviously retail can't win, especially on something this big, right? If retail buys space sectors and not SpaceX, they're not going to win. That's why the space sector completely just collapsed when we got closer to the SpaceX IPO. I can really see both ways for a bull and bear case. It's really tricky, right? Now, because one point you can look at what they're screaming about why it's bearish because the valuation, right? It's one of the highest valuations to company to IPO, and it's way above the revenue that they make, right?
What was it? Was it $3 trillion or something? Might have been 1.3 trillion.
Yeah, it's 1 point. Market cap right now is 2.4 trillion. Oh.
Yeah,
so
that's crazy.
That's insane for a company who makes like 20 billion a year or some crap. Or it was something ridiculous, right? It was not like I know for a fact that revenue they're making was nowhere near as much as their market cap. So yeah. I know they're super overvalued right now. However, you can say the exact same thing to Tesla. Tesla is like 360 times the earnings, which means it's one of the most overvalued companies in the entire NASDAQ, which is really bad. However,
you think so?
Yeah. I guess if you don't look at like penny stocks, whatever, but for like a big company like this.
So would you say that's objectively overvalued? Or, like, is there just so much hype in it and so much in like extrinsic value? Do you think it's
so from the PE ratio wise? Yeah, the PE ratio is like 360x right now, which is insane because it's supposed to be around 14 or 20. So
okay.
Yeah. So that is that's ridiculous. The only stock that's close to it, I believe, is PLTR. I think. Other than that, there's it's not on the board. Like I don't think anything else is really close to it. I believe this is PLTR. There's only one stock that I know that's actually close to Tesla's. It might even be a little bit more than Tesla. And I believe it was PLTR, but I could be wrong. So Tesla right now, PE standpoint, is extremely overvalued, which usually when the PE ratio is that high, it does tend to absolutely just get murdered. And so that's what, and I do expect that case to actually play out. I do think we're going to see $200 for Tesla. However, it's been like that since 2025. 2025 is when it really started, once we saw the 300s for that PE ratio. And it's been like that ever since, and we still reached all-time high, right? So, Tesla is overvalued, but yet we're still making new all-time highs. I do expect that to end. However, we are still doing it, right? So SpaceX, in theory, could still rip way higher just because the valuation is high. It's not like you can't really time that, if you know what I mean. Fundamentals are not a timing thing. It's more of, it can play out, but it could play out tomorrow, it could play out next week, it could play out next month, it could play out in 10 years, right? So the timing is almost unpredictable, right? It's almost unpredictable. Most of the time, I'll say probably around a year or two, maybe 3. That's probably when it mostly plays out. And so I do expect it to catch up for Tesla. The only reason Tesla has not crashed is because Tesla's entire stock is moved based off of the future of Tesla, right? That's the only reason it's not been crashing, because of the earnings and the revenue and stuff has been pretty terrible. Their sales have been going down, way down. And so, that's why the entire Tesla stock has been going higher. It's literally all just because of the pre-revenue, I guess you can say, with
it's anticipatory.
Yeah. I know there was a meme going on with the people making companies and crap in the finance space about everyone's talking about pre-revenue, with the venture capitalists. Now we're pre-revenue because they have no money. So Tesla, that's the entire reason it's actually still going higher, is because people are betting on Elon with these robo-taxis and with these robots that he's making. That's the only reason Tesla's at the price that it is now. So either the narrative is something changes, and now they have to either delay or it can't work on the robots or robo-taxis anymore, they shut it down. That's when, that would be very, very bad for Tesla. Or he just keeps on delaying it like he has been, and then eventually price does catch up, and then we start to bleed just because there's no actual future good news. So we can expect the same thing in SpaceX, right? SpaceX would be the same thing, right? Because they are merging. SpaceX and Tesla have like an 80 to 90% merging, and within 1 year. So they're going to merge into one stock, which really freaking sucks. I do hate that. Tesla, I have the Tesla chart nailed to the T. I know it's the exact personality. I know how it moves. So it's been easy money since 2023 for me. So it was my biggest winner by far, in general, my most accurate predictions ever. So it really does suck that we're going to merge it over into, I guess, SpaceX, and we're going to have now 5 candles to chart off of. So so SpaceX wise, I can't really have a say for this. I can definitely see us running higher. It may not be over. However, I think the buying is pretty over. I think institutions are already in. SpaceX is already, all the ETS, all the other stuff has already bought the SpaceX IPO, and so right now there's no new buyers really. As you can see with the volume, the volume has been significantly decreasing. So as of right now, I can see it crashing back to all-time low, and we could see maybe $60, maybe $40, just pure guess. But I can also see another reason that we just rip to a new all-time high. We go to $300 to $400, right? Because the earnings, the revenue doesn't matter. That, again, we already discussed that. It could be a long-term view. Doesn't mean it could play out right now. It could play out in a year or two. It could play out in 6 months. So really, I can see their way. To me, I'm not touching it. It's too risky. I would say even the entire space sector is too risky. I've been saying about ASTS, right? I know I think the last time we talked, I was getting a lot of hate on my ASTS charts, and I know I said my views were going through the roof, and it's still going through the roof. The entire space sector hates me right now because I called that crash with the space sector, and so to me right now, space sector is way too much risk. Even if the entire space sector runs to new all-time highs, it's just not worth the risk. There's such better setups that's way less risk. So yeah, to be honest, I think my overall pick and reason on this in SpaceX and the entire space sector is just leave it alone. Don't touch it. Let it play out. Make your predictions. Make your predictions so you can learn from it. Maybe you're right, maybe you're wrong, so you can learn from it. But other than that, I wouldn't really bet money on it. And if you have to 100% make that a lottery position. That should not be your biggest position. Definitely shouldn't be close to your biggest position. Probably not shouldn't even be in the middle of your portfolio. That is my view. Now, again, unless you're a long-term investor and you're buying like a long-term ETF for space sector or SpaceX or whatever else that is long-term on it, that might be different. But for an intermediate, 1, 3, 6 months out, no, I would not touch this at all. Too much risk.
Yeah, fair play. I love what you said there about still make your predictions and track it so that you can learn from it, but maybe not actually trading it because there's too many variables. I love that. And I think the reason why I wanted to talk about SpaceX, I think a lot of people have a lot of questions about SpaceX.
Yeah.
And so I think just us being able to give insight, even if the technicals for you aren't there, I think that might be very beneficial for a lot of people. So.
Yeah. And especially since mostly it's retail new guys watching it, you're better off leaving it alone and touching something else. So
yeah, remember the most profitable traders trade only about 60 days out of the 365-day calendar or the year. So, and I know there's not that many trading days, but
yeah.
Point is, be more selective. You'll be more profitable. Most likely.
Like I mean, last week, 2 days of my investment portfolio has outperformed SPY year to date, doubled it. So you don't need to take a million trades. All you need to do is take a few big trades. I only hold like 4 or 5 stocks. Actually, I think right now the only stocks I hold is SOFA, METU, CoreWeave, Zeta, and a very, very tiny position of ASDS, just my leftover position. So, and I mean, it's so small right now, it's basically zero. I mean, literally almost basically zero. So, really, I only hold 4 stocks, and so 4 stocks is all you need, really. Max 10. Any more than that, so you're just being too diversified, in my opinion. But that's just for my strategy, everyone's different. But yeah, you don't need to take 1,000 trades. I have a 48% win rate, and yet I am just absolutely demolishing SPY like it's nothing. So. And you know what? I posted this on social media yesterday, and that is actually, you know what? I can pull up the file right now, and that is right here. It is. You need to. Never mind. Trade if you won't let me paste it. But basically, you buy into strength, not into weakness. You bet on your winners. You don't bet on your losers. If you're down on a position, if you're losing money, do not keep adding to that position because it's not working. You need bet.
And that's so important. Yeah. Say that again for the people in the back of the class.
Yeah. So do not double down on a losing position. Double down on your winners. If a position's losing, don't increase your losses. If it's winning, then you want to double down. And retail, and I'm guilty of this a little bit too, they see it as, okay, my stock was at $100, it pulled back to 60, that just means it's cheaper, it's a better bargain, let me buy more. And then guess what, then it pulls back to 40, then it pulls back to 20, and now you're down, and your entire portfolio is now just down 40% year to date, and you're getting absolutely demolished in the market, right? So you need to find a stock that you buy a little bit at 80, then you buy a little bit more at 85, then you buy a little bit more at 95, then you buy a little bit more at 100, and 110, 115, you keep on betting on what's working. Never bet on what's not working. So it's a very, very simple concept, but it can definitely change your portfolio for the good. And people don't realize that, right? They'll look at like an example. They'll look at Zeta. Okay, they'll be buying Zeta at this EMA at $19, and then it pulls back to $18, maybe even a little bit of $17, and like, okay, this is cheaper. Let me buy even more, right? And that's not the case, especially for intermediate term traders, right? If you're a long-term investor and you're just investing to Zeta for long-term, then sure, just keep buying it nonstop. But they're buying it every single day, every single week. They don't really care where it's at, right? For us traders, intermediate term, 1 to 3, 6 months, even day trading, whatever you do, bet on your winners. Don't bet just because it's cheap. What is cheap can always get cheaper. So,
true.
Like, I mean, you could say the same thing as Zeta down here. And if you kept buying this dip and saying it keeps getting cheaper, guess what? You would literally be flat for the next year and a half. so bet on what's working. But yeah.
One of my active leaps right now is a Zeta 30 call expiring in January of 2027.
Yeah.
What do you think about that?
If the market has that next leg higher and falls the bull case, then absolutely. I do own Zeta. So I own Zeta. It's not a huge position. I do want to buy more once it gets more into profit and starts winning. Right now it's still early. Yes, the daily close was amazing off the support zone. Amazing. Really couldn't ask for a better daily candle, I guess, other than Gap to the all-time high. But cannot expect any realistic daily candle close than that. It was better. Weekly candle, still way too early. It's still red. So ideally, like when I look at entering my positions, I might enter star position once we touch the zone. Like once we react, maybe on the daily or the weekly. However, I am not going to start buying more until that weekly candle looks bullish, right? And this protects it protects you from losses, right? I have a 48% win rate this year from year to date, right? And if I just kept betting heavy every single time, I would not be up that much money at all. The reason I'm up so much money is because I kept betting on winners. So the few that did win, the 49%, 48, 47, whatever it was that did win, I won a lot more, right? My biggest winner was ASTS. And the reason it's ASTS, even though it crashed, was because I was buying on Sway V. I bought some more up here. I bought more on the breakout. And then I bought more, I think, on the daily retest. No, I didn't have a retest. We're at the retest of one now. But I just kept buying more here. I bought more on the higher low. I bought more on the breakout, right? And I rode that all the way to all-time high for literally like my biggest position ever. It was my biggest position by far. It was actually, I did break my rules. So it was such a big position. It was definitely against my rules. However, it worked out. I was very confident in it going to the SpaceX IPO. And then once we hit the all-time high level, I sold 75% of my position. And then I basically fully exited once that rocket blew up and we gapped down. And the reason I did that was because of the hate from the community, not from the chart. The retail were insanely bullish. They were literally cussing me out, almost giving me death threats because I literally trimmed my position. So, it was actually insane. I had never seen people be really that. I'm not going to say what I was about to say, but they're not good people. I'll say that. So I basically fully exited just because of that, which could not have been better. Could not have been better. I mean, we tanked through what was it from the all-time high? I already sold on this candle here, which literally almost couldn't time it perfectly. Yeah, we tanked 40% since my first 50% trim. So even though
a lot of extrinsic value going over there, we like that.
Yeah, and so right now I'm down 15% on my position, just because I kept buying more and more and more. However, down 15% on my position, which is now basically nothing of my portfolio, is obviously nothing. The 50% loss is. I don't even notice. I don't even see a change in the numbers. Now, if I listen to retail, and of course if I just held my full position all the way up to my red zone, I would be very pissed right now. But just like I DC into positions, I DC out of positions. So, but
scaling in and out is very important.
Yeah. So.
All right, let me hop on here. We got about 13 minutes. I want to get over some of these stocks that we want to review here. All right. Okay, so we talked about SpaceX. I want to give a little bit of my insight what we did here. So we were able to draw this quick trend line when SpaceX first IPO'd. This has it at 150, but I think it was 165, maybe 162 if I believe correctly. But anyway, what I had an initial buy. I bought 10 shares. By the time it was around 200, I was out of 8 of my 10. So I held on 2. I still have 1. So that's where I'm at. That's what I did with SpaceX. I didn't do any options. Options weren't even available when it first IPO'd. I think they came in Tuesday. That Monday after it IPO'd. I could be wrong, but that was what's up with SpaceX. I do think this gap down will be filled without much trouble at all. I definitely think 162 is in the cards, 150 is in the cards, and perhaps below. Long term, I'm bearish on long term, I'm bullish on SpaceX in the space sector. I totally believe in that mission, so I am biased. But again, this is a new IPO. There's going to be a lot of extrinsic value, a lot of macro relevant sentiment that'll impact the stock, a lot of variables. So I'm not going to be trading options on it.
Yeah,
I
100% agree with that. The space sector, I think, is probably the best sector to get into in the long term. It's just. It's definitely biased because I absolutely love rockets and crap. So it blows my mind seeing them catch skyscrapers on chopsticks. So to me, I'm like, when you see that, you're like, bro, this entire
catch
sector,
skyscrapers on chopsticks. Yeah. I love that.
Literally, it's insane. You can't even wrap your head around how insane that is until you really see it in person. Like when I went to NASA and I saw their Saturn V rocket on display, I looked at the size of that and I'm like, this thing went to space. This is insane.
Now it's back here. It's nuts.
Yeah, and then you look at the Starship, which is even bigger than that. I'm like, this is like, and they're catching this on chopsticks. I'm like, bro. I'm like, I can't even have it in my head. I have to watch this live to really understand this. So I'm like, it's just crazy. So I'm like,
Yeah.
this entire sector is about to go on a massive freaking bull run long term.
I mean, the upside is just ridiculous, right? There's so much upside if we can just
data
figure
centers
it
in
out.
space, all these other stuff they're putting in space, and then all these new extra satellites are about to get in space for telecom and stuff like that, and then the freaking bases on the moon and Mars. I'm like, I mean, there's so much money in this. And I can tell you one thing. If you look at if you follow the venture capitalist money, the VC money, they're all putting their money onto space. All the space companies, all this other crap, they're literally gathering billions and billions of dollars, hundreds of billions of dollars for every single company. So they're just throwing money left and right at these companies, and they don't lose. Venture capitalists don't lose. So, that's definitely also another good sign. But let's look at broad.com.
Yeah, so next stock I have on my watch list for the next month or so, maybe potentially longer, is going to be AVGO, right? Broadcom, electronic technology sector, semiconductors. You guys know the sector. Huge gap up presented here with the surprise on earnings. This looks like it wasn't as bad as I expected it to be. I did not follow AVGO earnings. I haven't been playing that at all recently. I've actually been neglecting the stock more than I wish I have been. But nevertheless, this is a very profitable setup. We have a huge consolidation range here from about 407 to the 431 range. I do fully expect us to reach the top of this 430 range very soon, potentially this week, potentially Monday. I'm not sure when that's going to happen, but what I'm going to do, I would definitely have an alert at 431.5 on AVGO. So one thing I want you guys to remember too, for those watching, what we've been doing thus far in this call has been mostly long-term analysis, right? A lot of Mr. Bear's charts here are on the weekly or the daily time frame. This is on the 2-hour time frame, and I'm going to go shorter on some of the rest of these stocks. So that's just one thing to keep in mind. But yeah, anyway, playing with AVGO, alert at 131.5. If we get that alert triggered, we are not going to just enter. We need volume above the volumetric moving average, and we need a cross of the higher high. We need all that to pair. We need all signs to point towards bullish continuation. So that's what I'm looking at for AVGO. If and when we do enter, we would set price targets at probably 450, 460, 475, and then our final one would be upon near the all-time high. So that's the plan with AVGO. Want to transition into a Mag 7 stock here in Amazon. Amazon and actually Zoom have a similar sentiment for me right now. So if we look here, we have a significant level at the 235 level. We also have a conflicting suggestion here, and that's in the gap down to potentially 213, 214, 215 level. A lot of Prime Day stuff, a lot of promotions, a lot of news having an impact on this stock and how it moves. Nevertheless, it is a Mag 7 stock. It's a very credible stock. It's hard to get much more credible than that. It's in a bearish trend right now on the daily time frame. If we go into an hourly chart, we see somewhat of a similar bearish sentiment here. It looks like it's already bounced off this 235 level twice. So again, this just proves the credibility of this level. One of the big things I want to talk about here is this 200-day SMA bounce. So this orange line that you see gradually, very, very mildly moving is the 200-day standard moving average, right? And now this candle here on this past day, I think, is very significant. We have a big jump in volume, right? So longest or most significant volume that we've seen since April 30th. I think this could be the pivot point. Now, we do have the EMA, the 9 and 21 EMAs to look for. We want an EMA cross. See this white plus here? We want to see that sometime this week. If we see that this week and we cross this higher high of 250, this psychological resistance level, I'm bullish on Amazon. But we do have conflicting sentiments, so it's something we're going to have to set our alerts and watch for. But anyway, this 200-day SMA bounce that we have on Amazon, we also have something similar on Zoom. Now, Zoom is in a different sector. Zoom is a little bit of telecom software, not as much, well, I guess not quite opposite of Amazon, but anyway, it is different. A little double top, maybe a triple top here in the past, since about the end of April. We could be pivoting here at the 200-day SMA, or we could surpass that and dip back down to the 73 level. I wouldn't be surprised to see either. But what I will say is, if it does cross the 200-day SMA, I'm expecting a lot of volume. We did cross it here, and we have HV1 here at 16.8 million on the candle following. So that's just one thing to look out for. I think this could be a very profitable setup. Zoom is one of my most, I'll say, successful stocks. Usually when I trade it, it's not overly profitable. You're not getting any 600% gainers, but it's more rare to miss for me when I trade Zoom. And this is one of the biggest things that I'm looking at.
Take those 30% gains.
Yeah, dude, they compound, man. They compound, and compounding is the way to do it. In the Army, they say slow is smooth and smooth is fast. So that's the way to do it when you trade too. You don't need the 600%. You just got to build 30s on 30s on 30s.
Exactly.
Last thing is mstr, and then I'll let you take over again, Mr. Bear. We did just fill this gap here to 112. I have a big level here at 100, big psychological resistance level. I would not be surprised to see this go lower. We did talk about this again, so I'm not going to talk too much about it anymore. And then I'll pass it back to you, Mr. Bear. But this is just another stock that I want to watch. I'm definitely going to be setting an alert at minus 10. I'm going to set one at 99.5. I'm going to be conservative here with how we play this, because I think this can go much, much lower than 99.5 if we do cross that. I think the next leg could even be to like 60. So
yeah.
And then I'm going to set an alert to the upside around 137. I just want to follow this stock a little bit more than I have been. So that's the reason why I'm setting these alerts. But anyway, that's all I got. I don't have any particular prediction from mstr right now. We have earnings coming up on August 4th. So just something to keep in mind. I think there's going to be an OPEX date in between here and there as well. So
yeah,
that's all I got for mstr. And that's all the stocks I'm watching right now, at least very closely. We could add more between now and market open, but that's where I'm at.
Go to the all-time high from mstr.
mstr all-time high. All right.
Yeah.
Looks like we are at 543 on November 18th of 2024.
Where do we peak out in July?
July of
2025. Yeah, that right side peak. Yeah, like right underneath
this guy.
Yeah.
This is 457.22.
I was short around $400, and I wrote that to around 130, 120.
Wow.
130. It wasn't a huge position. Didn't beat. I don't think it. Maybe it did actually. I have to review. I don't think it did though. I think when Bitcoin shorts made more money, but just because of leverage with futures. But yeah. I was in MSTZ, and that's I wrote that all the way down.
I own some of that as well.
Yeah, I wrote that all the way down as a hedge on the market, and so that was amazing. I wish I held it. But I guess I can't say that. Hindsight's 2020. I was up a lot of money. It hit support, so I sold. But yeah. So I mean, that's basically everything I'm watching. I don't really have anything else. Actually, I'll do one. I'll cover one really fast, and then that's basically it for me. SoFi, long-term, intermediate-term. This is the best setup in the entire market right now. No one can tell me otherwise. Long-term trend line, we are at the recess level. So this is by far, I think, my biggest position. Maybe mstr might be bigger. My Roth IRA just started it. So right now, SoFi is amazing long-term. Intermediate term is also really good. We are rejecting right now, which is expected. I do see a pullback to fill this gap and to bounce up these EMAs. Usually, before we see a breakout of a trend line, a wedge, bull flag, whatever it is, if it has any type of trend line on it, we usually do reject it first, form a higher low, and then we break out, right? So, especially after that wave. And so now I do expect a higher low for that gap fill, kind of like how I showed you the bull case with the ES, right? We pull back to the gap fill.
Yep.
Once we do that, we'll look for a breakout, and then we'll see the minimum target at least at 21.96, but I think we'll probably run to $23 before we'll see any type of pullback. And then if we do reject that purple zone, and then we can expect a pullback possibly to the retest level at 17.90, possibly just a higher low, but just some sort of pullback. We'll see once we get there, see what support levels we have. And then long term, possibly run to I wouldn't say long term, but intermediate term, run to $40, $37 around there. But we'll see what we want to do once we see the red zone, or not red zone, sorry, the purple zone. We'll see. But overall, this is an amazing spot. The CEO just bought shares too. He has been buying a lot of shares.
Wow! Really?
So I watched his interview with. You actually probably seen the guy. I forgot his name. But he's really big on X, and he opened a podcast, and I'll put the link in the comments of the video. I forgot what it was. But he does a podcast, and he did a podcast with the SoFi CEO, and SoFi CEO was no BS, said he is buying more shares and he's learning how to trade options so he can buy leaps on his company. So he made a share buyback literally just last week, and we saw a gap up. I think that was on the 15th. I think that's what that gap up was. And so, or actually, was it? No, it might have been this candle on the 29th of May. I don't remember, but we had a gap up not too long ago, and he was buying shares back. And he said that literally a few days before he did on the interview. So it was like pre-alpha on there. And then, so he is extremely bullish on SoFi. I think the only concern he had is SoFi is a bank. If they hike rates, honestly, SoFi is not going to perform. So that does conflict with our macro thesis with them hiking rates and possibly with the yields. So that does conflict for the long term. However, intermediate term purple zone can definitely be seen. So intermediate term purple zone definitely can be seen. My average is at like $15, like almost $16. I'm up 15% right now. Oh, so I'm even lower than that. So I'm probably, I don't know what my average is, but I'm up 15% right now. And oh wait, I'm sorry, that's right. I don't own SoFi. I own SOFA, which that's what I can do. So yeah, at SoFi, let's just say it runs right now to the purple zone. You're looking at 31% gain. But I own SOFA, which is a 2x leverage ETF. So if SoFi runs to that purple zone, SOFA will run to all-time high on the dot. So it'll be around 60% gain. I'm already at 15, so I'll be up a decent amount of money here. So I'm up so I'll be up over 85%, which would be very, very nice. So that is probably the best stock I see right now in the market.
I've heard a lot of people that have leaps on SoFi. A lot of people are really bullish, and I think they see 30 by this winter.
Yeah, that's definitely possible. I don't know if I would have done leaps. I guess I don't know. I guess if you target leaps to purple zone or by $30, I guess that's fine. But long term, with rate hikes possibly on the board now, I don't know. That doesn't really seem...
Yeah, that's true. That's true. There's more variables than we had before.
Yeah, SoFi, 2022 is when we start hiking rates, and that was nasty. Very, very strong bear market. Then even after that, it consolidated for years while the rates got cut again. And once we got cut, then it started bull market. So right now, it is definitely not too hot. But chart-wise, extremely bullish. But fundamental-wise, with that, it's not so bullish.
That's a lot of higher lows there. I don't know.
Yeah.
1, 2, 3, 4, 5. Is that 6? Almost.
1, 2, 3, 4. Yeah, about 5. Yeah. 1, 2, 3, 4, 5. So
5.5 maybe.
Yeah, maybe. Yeah, and who knows? Maybe want to go take out those lows. I don't know, but
yeah, it could be.
But chart wise, looks sustained. Looks really bullish, really bullish. But this supports this next leg up for the market. The next leg up for the market is all-time high. SoFi sees a wave 5 at this all-time high, and then bear market if they start hiking rates. So SoFi very well might see $37, $38, and I guess that would be good for leaps. But I guess that really increases your risk depending on the war. The war escalates a lot now, then obviously oil shoots back up to $120, maybe more, goes all-time high, then that would that'd be
that's the challenge of options trading, right? Putting a timeline on everything is the hardest part.
Yep. Yeah. That's why I gave up options and I do futures. but yeah, so and that's why I don't do long term. I can't. Anything can change, right? Anything can change long term. You don't know what's going to happen in 1, 2, 3, 4 years. I know it's going to happen from now to a month to maybe 3 months out. Other than that, who knows, right? Other than obviously surprise, like a freaking new war starts, and that's a surprise. But for the most part, the macro is not going to change within 1 to 3 months. So, but yeah, so that's basically everything I got. That's my thoughts on SoFi. I think right now, intermediate term, really bullish. Long term is a little iffy, but at least intermediate term and short term, extremely bullish. But yeah, if that's everything for me, is that everything for you?
Yeah, that's all I got, man. For those that are watching on YouTube here, we hope if you got this far, you already learned a lot, so you're doing the right thing. But I hope we were able to describe things in a way such that you can understand them, set your alerts, and learn alongside us. So
yeah, but all right, we'll see y'all next time, possibly next weekend. We'll see, but yeah. So thank you for watching, and I'll see you in the next one.
Yes, sir. Appreciate you guys. Have a good one.